Hello everyone, Dave Landry here from DaveLandry.com, and this is your Daily 5. In the last Daily 5, I was super excited about stocks and a little bit less excited about crypto. This time, I am still super excited about stocks and a little bit less excited about crypto. So let's dive right in. Okay, let's talk about the TFM 10% system. Now, the rules are fairly simple. I'm going to go through them fairly quickly since I've done many videos on this in the past. If you go to my YouTube channel at Dave Landry, you can find a lot of those videos, or on the Stock Charts channel, obviously. You want to exit a market when the weekly close is 10% or more away from the 50-week closing high and the market closes below the 50-week simple moving average. My thinking here is when things begin to become bad, they're likely to become worse. And it's a good idea to just get out of the way. The old hedge fund adage comes to mind. He who fights and runs away lives to fight another day. So as you can see, we had a sell signal last October, and unfortunately the market went straight back up, which is fine with me. I'd rather for a market go up than down. The buy signals are a little bit more stringent. You need 2 bars of Landry light. That's 2 lows greater than the moving average, and you also have to close within 10% of the 50-week closing high. So that was the last buy signal there. Now, I've tested it in the Qs, and it seems to work pretty good in the Qs too. Now, one of my clients pointed out that once the market gets 5% or more away, my threshold is 10%, but he pointed out that once a market gets 5% away or more from its 50-week closing high, then the market is in trouble, and he tends to want to get out when that occurs. And I tend to agree with him. Unfortunately, though, you're going to get a lot more whipsaw, and if you're comfortable with getting in and out a little bit more, then that's probably okay to do that. But based on what he was telling me, or inspired by him, I put these zones in here. So the green zone is less than 5%. This peakish zone is greater than 5%, and that's away from the 50-week closing high. And then the red zone means the market is 10% or more away from the 50-week closing high. Now, once you get 10% or more away for the 50-week closing high, bad things tend to happen. Somebody on Twitter pointed out that there's a 60% chance that the market will drop another 10% or so from that. And I did the research, and for the most part, it does hold true going back 100 and something years. So my thinking is it's a good idea to get out of a market when it's 10% or more away from that 50-week closing high, especially if it closes below the 50-week moving average. Now, again, the buy signals are a little bit more stringent. You need 2 bars of upside Landry light. That's 2 lows greater than the 50-week moving average. By the way, these are weekly charts in case you were wondering. And for S&Gs, I thought it'd be fun. I know you want to party with me, but I thought it'd be fun to buy 100 shares and see what happened. And so far, that's worked out really nicely, more than I ever could have imagined. So my buy was at $319.49, as you saw. The price a few minutes ago was $427.78, although it's dropped a little from there. So that's a profit of 108.24 points, which is pretty impressive. And you multiply that times 100 shares, so that's an open gain of 10,829, which is pretty impressive, again, just for a simple trade. I'm not saying this to brag. I'm just amazed at the run that this market has made since last March. Now, a sell signal would be way down here at 357. Remember, it has to be 10% or more away from the 50-week closing high and close below that 50-week moving average. So that's a pretty long ways down, and that's one of the issues with pure longer-term trend following. If you watch some of my Trading Simplified shows and my shows that I've done at DaveLandry.com, the weekend charts, or you can go to YouTube at Dave Landry, you'll see a lot of times I talk about how longer-term trend trading is where the money is, but the drawdowns are abysmal and your accuracy is very low. So I take more of a swing trade approach. Now, in this particular case, I'm just following the system mechanically. I can't guarantee you that I'm going to let this market drop 50-something points to stop me out, but we'll see. And a while back, I couldn't imagine me holding on to it this long, but I thought it would be kind of fun. Again, you want to party with me, right? To hang on to this position and see how things shake out, good, bad, or indifferent. Now, one of my clients said, hey, I didn't take the signal, now what? Like, where do I get in? And here's his actual post, and this is in my Facebook group. And the group is free, but you do have to at least be a gold member of DaveLandry.com. You need a little skin in the game in order to participate. Now, my answer would be to trade Landry-like pullbacks or treat the index like any other stock with the core methodology. My core methodology trades pullbacks. So in this particular case, you can see we had nice Landry-like for quite some time. Again, that's lows greater than moving average. In this case, I'm using the 30 EMA. On a daily chart, I really do like the 30 EMA. As you'll see in 1 second, it can keep you out of trouble. As a general statement, when the market is below the 30 EMA, as illustrated down here by the Landry-like indicator, you want to generally stay out of the market. When the market is trending nicely, especially after about 10 to 20 bars of upside Landry-like, you want to think about being long. And the Landry-like pullback is one of my patterns where you look for at least 20 bars of Landry-like, and then you look for a pullback to the moving average. So that would have been the last buy signal there. So if you missed that signal too, what I would recommend you do is wait for the next pullback to the 30 EMA, and then look to get long if the market begins to rally off of that moving average. Now let's talk a little bit about Landry-like and crypto. You could see the uptrend in Bitcoin was really nice for quite some time. We had lots and lots of Landry-like for months, late last fall. And then you could see in more recent times, we now have downside Landry-like, meaning that the highs are less than the moving average. So I would avoid Bitcoin for now based on this downside Landry-like. Also, never forget to draw your sideways arrows when applicable, or a better way of putting that would be look at the net price change. Where's the market now? And go back a few months, and you'll see that the market really hasn't made a whole lot of progress in quite some time. So green is good when it comes to Landry-like, and red is bad. By the way, the plugin is free to plot these indicators, or as I like to call them, illustrators. All you have to do is like this video and then click this little plugin down here, and you can get them for free. Now let's take a look at GBTC. Now GBTC is a spot Bitcoin ETF, and it does look a little better, or much better I should say, than Bitcoin itself. You can see we had lots of Landry-like, about 75 bars or so. But always with any indicator, or again, as I call them, illustrator, make sure you actually look at the chart. And again, take a look at the net price change, and notice that on a net basis, this stock or ETF hasn't gone anywhere in months, at least on a net price basis. Now, what's interesting is this was definitely a buy on the rumor, sell on the news situation. GBTC and many others were trying to launch a spot Bitcoin ETF. The SEC wasn't too keen on that, and finally they caved in. And you can see on this day here, market shot up on the excitement, and since then we've been drifting off in here. In fact, a little bit more than drifting off. Now, again, the GBTC does look better than Bitcoin itself. It's technically a Landry-like pullback. My only concern is, notice the sideways, again, movement here. So I wouldn't rush out and buy it at this juncture. Also, what's kind of tricky too is the discount to the NAV was 23%. So technically, if you bought back here and then the discount goes to zero, which it has recently for all intents and purposes, you'd get at least a 23% gain just on that. So that sort of bloom is off the rose as far as the discount coming off. And again, it was kind of like a buy on the rumor, sell on the news, because once it becomes a spot ETF, it's going to trade, or should trade, a little closer to the net asset value, the NAV. All right, let's take a look at a Landry-like pullback in a stock, and then we'll take a look at one in crypto. This was recently in my trading service for January 5th, and you can see there's a parameters there. The ticker is RYTM. It is a biotechnology. And if you want to see the archives of these, you can go to DaveLandry.com/archives. That is 100% free. It's a great exercise, if I say so myself, going through all these old services and seeing what I predicted and when, and then seeing what actually came true and what did not, of course. If you want to see them live, you can go to DaveLandry.com/trading service. So again, we had lots of Landry light here. Really nice uptrend. And again, always look at the chart. Notice this uptrend was accelerating, and then it sort of had this nice orderly pullback to the moving average, and that creates a Landry light pullback. Also creates some other setups that I trade. Bit of a kind of a TKO move within a pullback. And notice that it initially took off, but so far it really hasn't done much since. But I think it's still worth a shot. A good entry would be above this pivot point, or at least 45 or higher. And you could use parameters similar to what I have in the chart as far as the management of that position. Should trigger, of course. Now let me show you a Landry light pullback at crypto. As you saw earlier, Bitcoin's kind of trading off a little bit. It could be in the early phases of topping out. I hope not, but you got to be careful to use the word hope in markets. I'm sort of bullish longer term on crypto, but I believe in what I see and not in what I believe. And right now, there are a few crypto pairs that are setting up. I'm long several of them. And MKR is one that I'm looking at. You can see that it's been in a really nice uptrend for quite some time. Lots of Landry light. It has recently pulled back. Now, I don't trade every setup mechanically, or I don't look for every setup to equal everything mechanically. So in this case, it would just be a generic pullback, but it's almost a Landry light pullback. So you sort of get the idea here. A good entry would be around 2100 and then stop out about 1800. Broadcast that up to, I think that would be 2400 for your initial profit target. As always, I want to thank everyone for watching. If you need to get in touch with me, here are several ways to get in touch with me through Twitter, YouTube, TikTok, and Facebook. You can also reach me at my website at www.davelandry.com/contact. I also do a weekly webinar every Thursday. These are live, and that's at davelandry.com/webinar to register. You could also watch a simulcast of this webinar at YouTube, and my YouTube is at Dave Landry. Again, I want to thank everybody for watching, and may the trend be with you.